Hey, good morning. It is Mike Wise over at CMG Home Loans with your weekly mortgage update. And this week was supposed to be a pretty quiet week, but turned out it was kind of active. At the end of the day, we ended up where we started with interest rates a little bit higher. So let me give you some of the details of the week here. We talk about housing prices. They are still staying strong. Case-Shiller and FHA came out with some updates for the month of March. Case-Shiller up 6.5% year over year for the seasonally adjusted and the non-seasonally adjusted as well. FHFA, which is just conforming loan amounts, so that does not include any jumbo or all cash offers, went down from 7% to 6.7%. But at the end of the day, when you look at the map, we are looking pretty strong from the housing perspective. So the prices, they keep on going up. The darker the blue, the higher the prices are going. Everywhere in the country is going up except for the District of Columbia. So housing is super strong. Foreclosure starts, they are still way down at the very, very low numbers. We went to the lowest part in COVID when we did the extensions. Basically, we didn't foreclose upon anybody, but you can see that the foreclosure starts are still very, very low. Houses are being sold before they even get there, so into any type of foreclosure. PCE came out today, Friday, and PCE is the personal consumption expenditure. I want to give you a little bit of a math lesson here. The Fed, they have a target rate of 2%, so we're trying to get the PCE or inflation down to 2%. And this is how we do it. So basically, we take the year-over-year number at 2.813%. We adjust, we take out May of 23. So we take out a year ago's number. So we go back 12 months, we take out that number, which is 0.288, and gives an 11-month total of 2.525%. And then what we do is we give you the May number, May of 2024. So that's the new May number. And that will be released on 6/28. We think it's going to be 0.23%. And if you add that back in, you get to 2.755%. Now, this is generally going to be reported as 2.8%, which is exactly where we're at. And so what I want you to do is I want you to take a look at what we think forecasted going forward. MBS Highway gave us this information, so just wanted to kind of communicate it back out to you guys. But basically, the issue is that inflation, it's not going anywhere fast here. So again, the target is the 2%. We're going to have May in here. We think the estimate is going to be 0.23%. The 2023 number, so from a year ago, that number is 0.288%. So you're going to see a slight improvement of the 2.755%, again, being reported as 2.8%. And then you go June, July, August, September, October, November, we put in 0.2% all the way through the end of the year for the estimates. And then you can see that the outgoing number for that particular month for 2023 is, most of them are lower than what we are currently going to estimate for the PCE or the inflation numbers coming in, which means that inflation is actually going to go up. And so you can see 2.755, 2.783, up to 2.8, 2.9, comes down slightly because September had a higher number and you're taking that out of 2023. And then it starts to go back up and it's landing right around 3%. So very tough to get down to this 2% level. So something else has to break, and that's probably going to be the employment numbers that break here. And from there, you might see something more happen as a result of that. People have a lot of credit card debt out there. Their late payments on those are starting to get up a little bit. But at the end of the day, this inflation is not going anywhere fast. So the impact this week on treasuries, we had a couple of auctions that did not go very well. So if you look at the past 5 days, we were up here at the 50-day moving average. We were kind of sitting up there. And then the auctions came out on Tuesday and Wednesday. Actually, that would be Tuesday and Wednesday. And they did not go well. So the market did not like that. The prices went down, interest rates go up. And then Thursday and Friday, the market got better. At the end of the day, we ended up pretty close to where we started at from the beginning of this shortened week that we had. And then the same thing on the yield of the 10-year Treasury. Went up Tuesday, Wednesday, and then Thursday, Friday, it started to come back down again. The yield, we were at 4.48 on Friday of last week, and we're ending up at 4.48 this week. But interest rates, they did jump up a little bit. We're starting to see them come back down slightly here, but the 30-year fixed ended up at 7.29 according to Mortgage News Daily, and last week we were at 7.17%. So interest rates, they were up slightly. I don't think that they're going to go up anymore here. They're probably going to come down a little bit more even today. Interest rate forecasts for the Fed funds rate. This blue line is kind of where we think that where Federal Reserve Morningstar data is kind of this data here. They think the Fed funds rate is going to be down below 4% in 2025, and then in the threes of 2026, and then 2027, 2028, get down to under 2%. So we've got a long way to go over the next 3 or 4 years to get interest rates down. We do think that interest rates will come down towards the election, and we'll start to see those the interest rates come down a little bit further at that point in time, but they might jump back up after that. So wanted to give you some bridge loan options. We've got 3 brand new products that are out there that we help real estate agents with. Knock is like a regular bridge loan. Zavi is basically helps you buy your new house with all cash, and then they actually will sell it to you later on. And then Zoom Casa, this is a product where they actually buy your house today, pay off your loan, give you the cash or equity, not all of it, but give you some of the equity out of there to be able to go buy the new house. And then when you buy that new house, they will actually sell your existing house and then give you the rest of the equity once it is sold. And then always we've got our lines of credit, hard money products. Maybe you qualify for both homes at the same time. So that is an option out there as well. So you always want to take an application, get pre-approved, and see if we can get you to qualify for both homes at the same time. And then maybe we'll give you a line of credit to be able to purchase that new place. So, and then there's always a blanket loan where we can actually put one loan on 2 properties. So if you own your current house free and clear, can't get that one sold before you want to buy this new one, we'll actually do a loan that will be a blanket loan on both properties. And then when you sell one, it will pay down the existing loan. So lots of options out there. Wanted to give those to you. If you have any questions whatsoever, please feel free to let me know. I will be around this weekend. Would love to answer anything. Shoot me a text. Give me a call. I will be available. Have a great weekend, and we'll talk to you next week.